Welcome back to the project. What do we got today? Insurance in California. How it's going to affect you if you live in California and how it's going to affect me. We've been lied to again by our government that, insurance is going up because, they're greedy and no, they're in the business of risk. They know what's going on. They know that our policies here in California, they're all bad. They know that they're not doing anything in their power to help these fires. All the theft going on, that was going on. They passed a Proposition 36, which now puts people in jail. But all these break-ins and all these fires, they cost them money. A lot of money. So it's not their fault that they have to pay out the pocket. People got it twisted that, it's the insurance companies. They just want more. They're losing money. Yeah, everybody has to make money. But if California don't want to clean up their brush and PG&E doesn't want to clean up their power lines, I'm starting to talk like Gavin Newsom. This is a power line and everything around it, all the surroundings around the power lines, they don't want to clean it. Any kind of spark is going to set a fire. So they're like, well, we're going to up your insurance. And we won't tell, the public what you guys are doing and what you guys don't want to do. So we're going to up our insurance, and that's that. And that's what's happening here in California. It's not their fault. It's the government's fault. So check it out.
I have warned about the pending financial collapse of the California insurance market. And no, it is not driven by climate change. According to liberal politicians and the media, they are lying when they try to say it's climate change. It is actually the failure of government. And you've been paying the higher prices as a result. You have been put at risk of losing your insurance. And that's even before the LA fires. But these LA fires, I consider them basically the proverbial nail in the coffin to the California insurance market. Already the insurance market was financially on the ropes with a lot of providers like State Farm, Allstate, the private insurance companies saying that they were canceling policies and leaving the state altogether, that they were having so many financial losses, they could not continue to operate in California and insure people. So as a result of that, the insurers got together and put together a plan with the politicians. And the insurers basically have said, we won't rat you out. We won't tell the public why we really are financially on the ropes in California, your policies. More on that in a moment. And in exchange, you just got to do right by us. Let us increase our premiums. And so that plan was poised to be implemented by the Democrat insurance commissioner with the blessing of the Democrat governor and the Democrat supermajority in the state legislature.
That's exactly what's going on. Exactly what's going on. That's why in some areas, look, what a coincidence. People trying to make conspiracy theories. They pulled out 3 months before the fires. No, again, they're in the business of risk. They have people go look. Here's an example. You know how Google Maps, right? They have to have cars driving around, any new streets, any changes, any new buildings. They drive around in certain areas to get every visual part of, this new city. I mean, not new city, but like all the new structures, all the new roads, all the new signs, because they want to make a better user experience, right? They want to be accurate with their maps. So they have to constantly have cars out there, people driving around, filming the streets. Same thing with Apple Maps and what other maps they have. Now, in this case, the insurance companies, they have people driving around, going into the mountains, going to all these places where there can be a potential fire. So where I live in Northern California. Where I stay, I have trees and things like that, but it's good where I live, right? But there's areas where it's a fire hazard. It's a complete fire hazard. So yeah, they might even up their insurance more or pull out because no one's doing nothing about it. Now, I don't know how exactly this works. I don't know if they go down to the city and be like, hey, what are you guys going to do about this brush and all these trees in this area? It's a fire hazard. And if they see they're going to go nowhere with it, they're just going to pull their insurance because they know if something happens that they're not going to be able to cover it. So they'll just pull out. And that's what's happening. You know, if you're not going to get nothing on your return, I mean, on your investment, just pull out. So yeah, they're insuring all these people, but some are not insured for that reason. And it sucks because there's a lot of people that lost their homes in this fire that didn't have insurance and their home's not even paid off. And what they're giving to Californians to rebuild, it's nothing. You'll spend more on permits. It's nothing. $43,000 they said that the government's giving. And can they give more money? Probably. But California has been told over and over, do this, do that. Yeah, we're going to do it. Again, false promises. Yeah, we're going to do it. Nothing happens, and we have to pay for it.
They were in charge of those policies. They didn't provide water to the hydrants. Oh, but Carl, they ran out of it. The job of our infrastructure department is to ensure that we are prepared for any eventuality. And by the way, we now have confirmation that they didn't have proper reserves in the tanks for those hydrants.
This matters in legislation here in California. It's the government's job to provide what we need to put out fires, so we can drive safely on roads. Our roads here in California, they're not good. You know, we have people come down here from other states to work. I'm like, man, your roads suck. And we're the richest, one of the richest, if not the richest state in all of the United States, next to New York. And what are they doing? Nothing. There was a storm about 2 years ago. I want to say 3 years ago. The beginning of 2023. It was bad. It was 2 years ago. Really bad. That the park around the corner from my house, it was basically about 3 feet, 3.5 feet, 4 feet deep of water. On New Year's Day, there was people with canoes, and there's a creek there next to the park. There was people in canoes. In the summer, you know, well, it's always dry there, but there was people in canoes there. There was these kids. They put on their bathing suits. This is January 1st. It's about 40 degrees outside. That water's probably freezing, let alone all the nasty stuff in that water. And these kids decide to go, let's go for a swim. It's beyond me, but hey, you know, kids, you know, they're resilient. But what I'm saying is that we weren't prepared for that. We're not even prepared for a storm, let alone fires. The drains were just, oh my God, it was bad. Everywhere you drove, there was just flooding in the freeways and streets, and a lot of people lost their homes also. Why? Because they're not doing what they're supposed to. The drains ain't being cleaned up. Oh, well, that's the city's problem. Yeah, but why isn't the city's doing it either? Because they're not getting enough money from the government. The roads from that storm alone have not been, they just patch it. So again, all the things that need to be done in this state is not being done. Where's that money going? To the homelessness, to the immigrants. And again, I'm Mexican American. And if people need help, they need help. But what about your own people? We live in this state. And the way we're going, we're not going to have a state. It's going to end up flooding or burning to the ground. Oh my God. It's just ridiculous is what it is.
We also can blame the politicians for the catastrophic condition of our insurance market. No, it's not climate change. It is the loss value of these structures going up in smoke. When you look at the insurance market, they set their premiums based on what we call an actuarial model. It's done for life insurance. Actuarial models are done for pension programs to figure out how much money you get to collect for a pension payment in order to pay people out over the course of life for retirement. So actuarial models are done by a bunch of smart people with a bunch of calculators and math. And what they do in the insurance world is they take a look at the number of incidents that they are likely to have each year of losses, and then the dollar value of replacing the items that are lost that were insured.
They're in the business of risk, and they're going to do their math. And if it doesn't make sense, if it doesn't make dollars, it doesn't make sense. So like again, they're going to look at these areas. Oh, well, it's not going to work out. They're not cutting this. They're not doing that. We're just going to pull out. Or we're just going to have a high premium for them. And that sucks, man. It sucks for us.
So what's going to happen next? Well, the insurance companies will announce that they do not have the financial reserves to pay out these claims. The FAIR Plan does not. I tell you right now, 1 in 7 people in the Pacific Palisades under the FAIR Plan, that's about 14.5%. There's no way that the government-run insurance program will have the money to pay out its share of these claims. And so a couple things will happen in rapid succession. Number one, you're going to see a massive increase in the people who are dropped in their policies. And they will then be forced into the FAIR Plan. As I mentioned earlier, the differential in price for premiums, private sector is about $2,200 per homeowner for insurance in California. And that's 2 years old data. That's going to be much higher soon. The FAIR Plan is $3,000 or above per unit, per structure. Many of you are going to be forced into the FAIR Plan. But the FAIR Plan itself won't have the financial resources to make good on its commitments, which means that they're going to go to the insurance companies, and the insurance companies are going to say, hey, we're walking out. We're not going to be part of backfilling your government-run plan. The FAIR Plan premiums will skyrocket even farther up. Oh, and then the remaining delta, the remaining shortfall, the politicians will say, oh, this is not a general fund obligation. This is a special outside the general fund budget obligation, which requires a special tax. So what they're proposing right now is at the end of each year, when you pay your insurance premiums, that there would be almost like in your mortgage, in your escrow account, a true-up payment that you make at the end of the year. Fortunately, your escrow company allows you to spread it over the following year's mortgage payments. Not what's under consideration by the government. The government's looking at a one-time penalty payment. They call it an emergency assessment. Well, it's not an emergency assessment if you know it's going to happen.
So for those of you that own a home, I don't know if you've seen your insurance rates go up or your taxes, right? My mortgage, everything is included. And every year they send me something and I'm looking at it like, hey, what's this? And I call it, hey, what, because sometimes the way they word it, I don't know where the money's going. So I look at it and it's like, oh, well, my insurance went up about $30 for the year, right? I could pay those $30 up front, or I can just add it to my mortgage. It'll probably be like a couple dollars more, right? Throughout the year. So what he's saying is that basically, if you have the government's insurance plan, which is the FAIR Act, at the end of the year, you're going to pay one balloon payment. So if, whatever it is, like, $1,000, you won't be able to spread it throughout the year. You have to pay it all at once. And if you don't have the money, well, that's that. You get canceled. Right now I'm paying, I want to say about almost $1,300 for my insurance. It has gone up since I got the house. And he's saying it's going to go up to $6,000. In another video, he was saying it can go up to $6,000 for your insurance policy for the year. Now that's about, if you spread it out throughout the year, it's about like $500 a month, I think. That's a car payment. That's a car payment. Some of these people won't have the money to pay this. How are they going to have insurance? And again, if you have a mortgage, it is required that you have insurance. So how are they going to be able to afford insurance? Some people can let alone afford their taxes barely. Now their insurance is going to go up. Again, a lot of lifestyles are going to change, accordingly because of these fires. And you know what? It's not even because of these fires, because of their policies. These fires just made it worse. And now it's clearly showing where we stand as Californians. And we need to do something about it. We really do. And getting people out of office is not the answer. I'm not saying that Gavin Newsom doesn't deserve to leave, because he does. But I think there should be something where if we vote in for you to take care of our needs and our problems, do it. And I don't have it figured out, but there needs to be something done where we're like, hey man, like you didn't do this year. Like a review basically the year. You didn't say that you said that you were going to take care of this first thing. You haven't done anything. And you know what? They need to start doing, taking responsibility and doing what they have to do. And if they don't, then hey, you're out of here. It's just time that they need to start, again, taking accountability for their actions. We all know they're pocketing their money, our money, because where else is it going? He makes $200,000 a year, Governor Gavin Newsom. He makes $200,000 a year. And he bought a $9 million home in Marin County. And he kept the one he was staying in. But yeah, hey, he could live like that. Well, that's all I got for today, right? There's one thing they can do. They don't want to cut the brush. They want to provide jobs. If they cut the brush, that's more jobs for people, for landscapers. A lot of work, but it's expensive. They don't want to spend the money. They want to use the money for something. That speed train that was going to cost $33 billion, that's now 128 or 133 billion, whatever the price is now. They can stop that. They can use that money. The thing is, they don't want to do that because they want us off the roads also. They'll build this train, and guess what? It'll probably start at like $50 from here to LA in 3 hours. Then later on, they're going to tax you for this, they're going to tax you for that. Kind of like when you look at your cell phone bill. What? Street tax, light tax. You're paying all kinds of taxes for a cell phone. Wall tax. But that's all I got for today. And like Gavin Newsom says, or does, don't forget to subscribe. Leave a comment.